All right, this is going to be our IUL and annuity segment. Every other week, we're going to get on and talk about a bunch of things, including how we can add sales in the IUL and annuity in the simple retirement solution sector. And I have Brian Turner with me today. We're going to go over a couple quick tips and in the next 10 minutes, a couple things that he does to help write these cases. And he's been issuing probably about 30 families helped a month in IUL business pretty consistently over the last 6 months. So first thing, Brian, I guess, is if you can give everyone just like if you were in an elevator with someone for a minute and they asked like, hey, like what's an IUL? Like how would you explain it in a way that's super simple for agents and clients to understand?
Yeah, absolutely. Thank you, Zach, for having me on. I think the first thing is just understanding, number one, it's not an investment. It's a life insurance policy. So I always want to make sure that people understand that. And basically the way that we set them up, there's a couple different ways that you can, but I always tell people you kind of look at it as a financial Swiss Army knife. Sean Ruggiero said that, and I took that from him. And basically, we're setting them up typically for somebody who's trying to earn interest on their money. We're kind of re-engineering it to where you have minimum death benefit possible, which basically just means the smallest cost of insurance possible, so that you can then park a little bit of extra cash in there that you have, throw in some extra money on top of that that can accumulate. And then that money that's not going towards the cost of insurance has the ability to earn interest. And that interest is tax-free because it's all within a tax-advantaged life insurance environment. So,
Got it. And then as far as people you're looking for, and we've done some things with leads, which if people have questions on that, they could probably reach out to Sammy, would probably be the best person, Sammy at ffl-capital.com. But like what's the ideal client for an IUL? Like, who, it's not everyone, right? It's not the 75-year-old person who's had health conditions. So
right.
like who are you looking for your ideal IUL client?
Yeah, typically the right client for an IUL is somebody, first of all, who is healthy. If they're younger, that's better. So I would say, below 50 is ideal. But really anybody is, as long as they have the ability to allocate and properly fund enough, money on a monthly basis or yearly towards a policy. Because we're going to go ahead and do whatever we can to make sure that the cost is, again, the smallest, the minimal cost possible as, we're supposed to be doing. So honestly, the healthier, the younger, the better. But anybody that's like looking for a way to basically store their money somewhere else other than the bank, I would say it would be a good fit.
Got it. And then can you kind of go through what your process looks like for, say you get a lead in or you come across a client who would be a good fit for that? Like and you're doing it all virtually, right?
Yeah.
So can you go through kind of what the process looks like from the initial call to how you actually get them through the process, show an illustration, and then, submit an application with them?
Yeah, absolutely. So really my main focus is to ask certain questions so that I can understand where they're at. So obviously we want to make sure that we kind of knock out the preliminary questions for underwriting, make sure that they're, like I said, healthy and that they're not, scraping by each month, that they have extra income, because we want to set our clients up for success. So once I kind of have that understanding, then I'll just explain a little bit more about what the product is. I'll say, hey, listen, I'm going to do my best based on what you told me with your goal of either getting, an efficient permanent life insurance policy. Then we might structure it with a little more death benefit in that case. Or on the other hand, most of the clients, I'd say about 90% of the people that we talk to, they're looking for something where, like I said, they can park their cash somewhere where it can earn interest and grow tax-free. So once I understand that, I'm going to say, hey, so typically the way that we're setting these up is with this minimum death benefit, maximum cash value structure. So I want you to imagine two buckets. Basically, you have your first bucket, which is your cost of insurance bucket, and then you have your other bucket, which is your cash value bucket. Cash value, I'll just explain, is essentially just a insurance savings account that can earn interest higher than an average savings account in your bank account would. And then I'll say, hey, so every time you go to make a premium payment, we have some of your premium payment going towards your cost of insurance. That's a good thing. That's so that it's, grows non-taxable income and earns interest. And that's also so that you can leverage what's called OPM, other people's money, which is essentially just the ability to take loans from the insurance carrier against your policy or the amount of cash value that you've overfunded voluntarily into the policy, so that you can then use your money, have it earning interest as if you never took that money out. Because even though you take out money, you're actually borrowing from the carrier. And as a result, that money that you paid into it still stays in there. Meaning if you had $100,000, you took 20 grand out, you're still going to have $100,000 in there earning interest. So that's how you get uninterrupted compound interest. And you also get to leverage OPM, other people's money. So this is how we're going to pay ourselves first as individuals and be able to earn double interest. And then from there, the more you fund it, the better, the earlier and the quicker, but you do have the ability eventually to stop paying into this policy. So let me just kind of go through an illustration with you. You know, I ask the client a lot of times on the spot, I'll say, hey, do you have time to jump on Zoom? If not, we'll reschedule a call. Then when I'm on a Zoom call with them, I can go through an illustration with them, walk them through the more specifics of the numbers. And this is where I like to go into more detail on how does your money actually earn interest in a life insurance policy. How are people, you know, being their own bank with life insurance? Well, essentially when you're using an IUL, that money is tied to an index. So I'll go through the illustration that they've said, you know, hey, I can allocate this much per month. I know they're healthy by this point. They don't have anything on their record that's going to, you know, cause an adverse decision and put them in a bad spot where they won't be able to get simplified issue products. And I'll start going through, you know, what indexes are and describing the different indices that are offered through different carriers. So we can kind of compare, hey, you know, this company versus this one. You know, National Life Group, they've been around since 1848. So, you know, they have 175 years of history, whereas, you know, other company XYZ, you know, they might offer something different. Okay. So once they have an understanding of what interest is, how the interest grows, I'll explain the difference between participation rate and a cap, saying, you know, hey, if you had a 10% gain in the market and you're tied to that index and you have a 100% participation rate, well, then if you don't have a cap on that, you're going to get that full 10%. If you have like National Life's current participation rate at 215%, then you're going to have, you know, 21.5% growth versus just 10%. So then I make sure that they understand the difference between what participation rates are. And then, hey, you know, there are index strategies out there where you have a cap. So cap is just like what it sounds like. It's a ceiling on how much growth that your policy can get in one particular time. And it's all on an annual point-to-point basis. Do you have any questions? They answer, you know, yes or no, or how do I take my money out? And I'll go through explaining that as well. Got it.
And then typically from there, you're just showing them illustration and jumping right into the application if you can, right?
Yep, that's cool. Pretty much it. I don't really hard close it. It kind of just is providing the right information so that they can make an educated decision.
Cool. And then what are some resources that you've looked at or that you've watched to learn how to sell these products the way you have, that you if other people are interested in this, you know, they want to add this, where should they go to learn more and to do a deeper dive and understand how these work better?
Yeah. I would say FFL AMS. If you haven't like registered to get an account, that's a great place to start. You can reach out to me as well, or it's always a good idea to go directly to the carrier. Mm-hmm. If they can't answer a question, then try and book a call with somebody on their team. They have advanced market team as well, whichever company you're talking to, so that you can get the right answer and make sure that you're, you know, relaying the correct information to your client. If I ever don't know a question, like we get, you know, complicated questions like how do you set up a trust, or do I need to get a trust set up beforehand or after? Does it matter? You know, so I'll call the carrier. I'll say, honestly, I don't know, but I have a lot of people on our team that back us up, that I can get that question answered for you correctly.
Yeah, and the AMS team can help a ton too with that, to Ask a Specialist. And then we have our retirement boot camp that Sammy can put on in the chat here on the screen. So awesome, man. Well, I appreciate it. Thank you. I know you've taught a lot of people how to do this stuff, so I appreciate everything you do for the team.
Absolutely.